Morning, everyone. Welcome to the room. As you know, trading futures involves risk. It's not suitable for all investors. The information in the presentations for educational purposes, not a trade signal service, not intended to be financial advice. Hope everyone's doing well. Yesterday, a pretty quiet start to the week, but also some good movement. I guess I shouldn't say movement, but important that we were able to break these swing highs up here. So even though the intraday price action was very slow, we were essentially within the first 30-minute range, 30-minute bar all day long. Because we gapped up, that added some significance. So we got these highs back here that we've finally broken. And as you can see on my daily ES chart here, we've got a 50% retracement drawn from the all-time high down to this low on beginning of April. And that's the 2752 that I've been talking about. And so if we can break this 2752s, that will essentially be a failure of the final full halfway back short and should send us into some pretty healthy long territory. Now we can draw up a couple of long setups on the daily chart. One from last week that traded at about 2700s, and that's where yesterday we kind of gapped up and then sat on top of the negative 23% target. So if we this morning move higher and maybe move through 2752s, we could still pull back to the next daily long retracement, which would be a 27.2475 right now. That will likely change. So I'll keep my eye on that. We have a couple of gap ups on this move up. Therefore, we have some open, unfilled gaps. So it would not be surprising at all to me if we do pull back and get some selling, especially in this pattern that we've been in of, we've had a gap down, bearish day, and then follow that up with a gap up and a strong bullish day, then gapping down, another bearish day, kind of taking it all back, gapping up, taking it all back once again. And then yesterday was kind of the first day where we broke that pattern of moving in one direction and then reversing and taking it back the next day. So market breadth pretty flat on the open. I'm just looking at the ratio of the volume ratio and then the net number of stocks in the NYSE. Those are these two boxes up here, the market breadth and the advanced decline line. And then the NYSE ticks, this chart here in the bottom left, pretty quiet as well, very close to the zero line. An extreme reading for the NYSE tick, this chart here moving up and down, would be plus 1,000 and minus 1,000. An extreme reading for this breadth ratio, that's right now reading 1 to 1. Something in the 4 or 5 to 1 would be much more convincing. As we get towards 7, 8, 9 to 1, that's very polarized. And then for the advanced decline line here, currently reading about 175. An extreme reading for that would be, anything outside of 1,000, where we have a lot of stocks moving in one direction and a little bit more polarized. So I always start my day looking at the overnight session. I give the market about 15 minutes to kind of settle out before placing any trades. And a couple of things that I'm looking at where do we go in the overnight session? There's not nearly the volume in the overnight that there is right now as we start the NYSE session. But you notice up here we put in a 27.51.75. So we moved up to the 61.8 in the overnight session. So I want to see that happen in the trading hours only session now to really give it more weight. It's noteworthy at this point that we've traded there. Yesterday's high was only a 49.25. So we've moved above yesterday's high, but again, that's in the overnight session, and there's not nearly the kind of participation volume traders involved in that session as opposed to right now. I've also made a couple notes from yesterday's profile, and that's here, the market profile. You can see the very first 30-minute bar was both the high and the low for the day, and then we stayed within that all day long. So we have a very narrow profile. We have a point of control, sort of that balance point where most of the trade from yesterday took place, right about 27.46. Currently trading just above that. But as we look at, a couple things I look at are, okay, where's the value area? So where did 70% of yesterday's trade take place? That was about a 43 to a 47. And then yesterday's high and low is also important, especially that we've gapped up. You can see it a little bit clearer on this market profile chart. I've got the yellow highlighted where price has not traded. So the blue is the close from Friday. And then all of this yellow is where price did not trade yesterday. So this is the unfilled gap. So we've got about a 34 up to a 39, so 5 points. But you'll notice Friday's high is at a 37. So there's not very much open space or empty space between Monday's low and Friday's high. But what you'll find is when we start breaking down below what is now yesterday's low, if we do that, filling the gap comes really quickly, and filling this blank space comes really quickly. So the market would often break down below, say, yesterday's low, and then go very quickly to the previous day's high, maybe pause briefly, and then make its way down to fill that gap entirely. But that's only if we start breaking value area low and yesterday's low. If we move higher, so a 27.47, right about here is value area high from yesterday. And so right now we're kind of at this inflection point. Again, the market's just opened. We're sort of sitting on top of value area high from yesterday. And we also have a high to low drawing here that the market is pausing at the short. And so we should have some resolve here in the next 5 minutes or so. We're either going to break this little double top, break this 61.8, or break this little double bottom, and where that's only a couple point difference, 44 to a 48, about 4 points. And so it's helpful to kind of get an idea of what was happening in the overnight, make some notes about maybe the high or the low of the overnight session, see if the market is adhering to any specific retracement levels, support and resistance levels. Even if you're not using fib retracements as sort of your guide, if you will, we could get rid of this retracement And we could just say, okay, well, let's take a look at yesterday afternoon into the overnight. Now we've got this kind of top here that was acting as resistance most of the afternoon. Okay, so let's just throw a line up here, and then we can say, okay, well, this same top kind of acted as support here in the overnight. We got a little bounce. And then now we're kind of hovering around that same level, almost acting as resistance again. So whether you're looking at just purely previous horizontal support and resistance, or if you're using the fib tool to just give you an idea of, okay, where is that point of halfway retraced? Where is that halfway back point, or where has the market pulled back and how far? It really doesn't matter which way you look at it. You kind of end up at the same place. Now, some things about today that are going to very strongly impact my decision on my trading decision. So we don't have very much for news. Yesterday's range, very tight. And again, the first 30 minutes encompass the whole day, meaning we didn't move above or below the first 30-minute range. So as long as the market is trading within yesterday's range, so that's we'll call it a 40 to a 49. As long as the market's within that price range, I'm going to be very cautious to trade, because I know that yesterday the market didn't move a lot, didn't give a lot of setups. There wasn't much follow through. Notice how we had these bottom tails here. So even when the market did start to make its way towards yesterday, towards what was the previous day's high or gap fill, it made a little move down, and then by the time the candle closed, the bulls were able to kind of push things back up. And even up at the top, topping tails pushing the market back down. And even here in the afternoon, a very, very tight range. And so I don't want to get chopped up in a tight range if that's what the market gives us this morning. So you can kind of use that as a safety net, if you will, or a line in the sand of the likelihood that the market is going to give us something worth trading. Now, the benefit of a very tight range day is, it's only about 9.5 points. So we're pretty close to highs. The market could easily move outside of yesterday's range in a hurry. And if we start moving down, break down here, it's only 7 or 8 points for us to move down and break yesterday's low. And so those are kind of the two areas that I want to be active in, unless we see something very actionable on the intraday chart here. One thing that's helpful, so I like to draw up the retracements and continue to draw them, kind of waiting for either this retracement here to fail at 61.8 or complete down to the negative 23. And if it fails the 61.8, then we can look for a potential long setup from just drawing from down here using the same anchor point at lows to wherever the highs end up pausing at. If we complete down to the negative 23, then we could just use this high near the entry point at the 50 and use the low anchor at wherever we bounce at, and then we would be looking for a short. It can be helpful intraday to look at the trending nature within the first 30-minute range. So I find it super beneficial to mark the high and low of the first 30-minute range to help us visually see, okay, so like yesterday's example here, we know that the high and low are marked on our chart, and as we come up and we kind of get this double top at highs, we can watch for what kind of patterns present themselves within the first 30-minute range. And sometimes we're able to kind of identify a developing trend that's going to lead to a breakout or like a breakdown from the range or a breakout from the range. Yesterday we didn't really have that. We just kind of moved higher in the morning, moved back down in the next 30 minutes. So like the first hour of the day, we just sort of moved up and moved down and then kind of stayed pretty middle of the road, middle of the range for the rest of the day. This morning, as we just look at the overnight, what I'm seeing here, you can just kind of look at these lows and say, okay, well, this low is higher than this previous low back here. And then this low is higher than this previous low. This low is higher than this previous low, these last two. And so you're starting to see, I can even draw a little channel here, if you will. Starting to see some trending channel develop, even though, we're only a few minutes, 14 minutes into the morning, and there's not really a whole lot of range developed. So I've got here on my notepad yesterday's high, 27.49 1/4, as well as this 52 above us. And if we can break, first breaking through to 49.50s, I want to see what kind of reaction we get. Currently, we just kind of tag just below it, and what's happening, we're getting some selling pressure. There's kind of two things that can happen when you approach highs or approach lows. You come up to it, and you immediately get hit with quick selling, or you come up to it and you break through it and you're met with sort of an acceleration. Price breaks through and then it goes tick, tick, tick and moves through it really quickly. One thing to watch out for that a lot of pit traders try to do is kind of short right as the market touches that high, get some selling pressure, and see if they can push the market down enough to get more players on board. But a lot of times what happens is price will come up to highs and for 30 seconds or a minute get a couple of ticks down, kind of like this, and then we break through it right away. So I would not consider these 3 bars heavy selling interest at highs. We also did not have a high tick. Did we here? I wouldn't call this a high tick at highs, just because, well, so whenever we have a nicey tick that lines up with the price, so a high tick at a high price, that's something to make note of. But because we're so early in the day and it's only about a 350 as the actual high tick, it's likely to be broken. However, we are at yesterday's high, so I may take a stab here at a short. challenge now is that we've got this uptrend, and this range is so tight that the market has already moved to the bottom of its range, like so. So we've already come back down to the bottom of the range, and that puts our reward to risk in not very good favor. We just went from a high tick of the day to a low tick of the day in a matter of just a few seconds, and the market only moved a point and a half. I don't really like that reward to risk at this point. So a lot of identifying good trade setups can come from, okay, what is the opportunity? What is the reward potential? And at this point, it's still pretty early. There's going to be plenty of opportunities this week. Kind of have this triangle even forming in the overnight, and a ascending triangle here from yesterday, close to highs. So there are a lot of good signs, even though our breadth, our advanced decline line, and IC tick, even though a lot of things are pretty flat right now, there are some of these just basic structure here of the higher lows that are forming along this trend line. Some of these signs are pointing to a market that's moving higher, and we did get a break of the 61.8 by just a tick or so. If I turn off trading hours only now, we can see that trend a little bit clearer from yesterday, that move higher. Let me get rid of that overnight short drawing. We haven't had a lot of opening trading hours only setups follow through very strongly. What I mean by that is just taking from the opening low to high. Now this would be perhaps one of the first ones in the last couple of weeks if it trades all the way to its negative 23% target. So I haven't been getting too aggressive right at the open, especially with these low to high or high to low of just trading hours only. But if I start to see that trend again present itself, then I'll look to get back in those. So this low tick that we had down here doesn't line up with the low tick of the day, but it is a sign that a lot of times just buying in a relatively low tick is a good way to get in a trade at a support or resistance level, just like selling at a relatively high tick. So I'll leave this trading hours only low to high up. It's only a couple of points wide, and even the distance here between the 50 and the negative 23 is only 2 points by the time you account for getting in the trade and the target. Again, I'm not long here, but just drawing it up as a reference point. So once again, we either complete or we fail the 61.8. And we are close to breaking yesterday's highs, but still within yesterday's range. Let's compare what NQ looks like compared to the ES. Hasn't broken out yet. And then same with the YM. Actually moving lower compared to the ES and the NASDAQ. There have been some pretty strong moves here in some of the tech stocks, especially big names like Netflix and Amazon. Apple was also on its way towards that 200. Home Depot I've been talking about for both swing trading setup and also example purposes of trailing your stop. And I want to get back to this here in a few minutes and talk about some things with trailing your stop. Kind of developing a very, very clear resistance level here right at yesterday's high. I would expect a pretty punchy breakthrough if we are able to break it. A break of highs and then pulling back two highs would be a good possible long setup. That one of the scenarios that I'm kind of running through my head. Okay, yeah, it's great if the market starts moving, but what do we want to do to then capitalize on it? Do we want to get aggressive pre-breakout and try to get into a trade? Something like back here, taking the trading hours only long. Well, that hasn't really been a strong pattern in the last 2 weeks or so. We've seen more failures of that very first trading hours only setup. So that doesn't give me a lot of confidence to say, okay, well, the conditions are pretty similar, so I would expect, maybe a similar result. But it's important to note when things start to change, or when something piques your interest, or when you notice something that kind of makes you say, that's different than the patterns that we've been seeing. That's where that intuition really comes into play. Also talk about a little bit about futures rollover this morning. Touching now yesterday's high. Notice, so yesterday the first 30-minute candle straight up, next candle went straight down. So let's see if we break through and punch and move quickly to 52s. So there's our new high by a tick. So far, not that breakthrough and punch through momentum. We broke through by a tick and then just sort of paused. Didn't even make it to the negative 23% target yet, which was only 2 points from this daily. There we go. Okay, so now I'm going to draw up the next long setup. 48.75s, I just call that a 49s. Again, kind of lines up with previous highs. So looking at that as a long setup here. Not a huge distance between the 50 and the negative 23. That 52s is not too far above us, but if the market is going to kind of break out here, well, it's going to do it from here. If we're not, then you take a stab at it, maybe get a little bit of a reaction, and then the market rolls over. But if it's going to break out and not retrace, this is that point. Here we have a high tick at highs. So we've broken the high tick at high alignment. So anytime we have a high price that's after a high tick, then kind of cancels out the high tick at highs, and we could just continue to make new highs until we get a high tick that lines up at the high price. If we go to the left a little bit and see what's kind of behind us here, well, there's not much. We've got some highs up here at 2807, but not a whole lot. Back here at 2790s, but not a lot of resistance above us. And that was one of the reasons we got this little high at 55s. That was one of the reasons why this breakout above the 52s here, or even just above these swing highs, was so important. Sometimes what I'll do is just place a buy stop one tick above highs. So like yesterday's high was a 49.25. Sometimes I'll just put a 49.50 out there and let the market trade through it as a buy stop, and still use a 6-tick stop, but just use that as a way to get in case we don't get a pullback. I did not do that this morning, but sometimes it's just a matter of getting in and then managing the trade from there. I've had some pretty nice swing trading positions materialize in the last a week and a half. We can talk a little bit about those too, but So typically what happens as day trading may slow a little bit or be in a lull, typically swing trading kind of picks up and fills that void, and vice versa. If volatility is really high and there's not very good daily trends, then there's usually a lot of good intraday opportunities. So I don't get overly excited about not having a whole bunch of trades any given day. So if we use this morning's low to high, that's a 49. And if we use this low from what would kind of be the second retracement in the series just this morning, it's a 49.75. So we'll see if the market gives anything, any sort of pullback here. I mean, at some point it will, whether it happens now in the next 30 minutes or starts to move quickly. We shall see. But see, sometimes, the breadth and the advanced decline line are a little bit slow to move. There's not a whole lot of volume yet going into these stocks that are moving up. If we just glance at some of the, the bigger names that are moving this morning, they're already kind of moving up this morning with, some volume, but there hasn't really been a huge push or shift into those stocks. They've just sort of continued to move up. And so by looking at the basic price structure and the trend, that gives us a better indication of, I passed on that short this morning because I thought, from what I was seeing, that it was likely that we were going to break high. So, even though even though the breadth and the advanced decline line is not super strong, that doesn't mean that there's not trends developing. Yeah, overnight high was a 51.75. We're now through our big daily short failure of 61.8, so that's a pretty big level. Even if all we did today was just break that, and the market didn't give us anything, that would be a great day. Because now, like I was just saying, we've got open space above us. We've got the ability for the market to, maybe pull back and retrace a little bit. Even if we did a full retracement here, that would be totally okay, because we've now broken and we've got that open space above us. So even if we all came all the way back to 27.15s, that would be a fine launching pad, if you will. So I'm going to leave this. So 27.50s is the next long, and the 27.49 is also the trading hours only long. So we'll see if there's anything there. We're kind of coming up to resistance here, but the market has shown that it's capable of moving up this morning. So we'll see if there's any follow through. We don't have a high ticket highs. Now you can when the market starts pulling back but doesn't come all the way to the long, you can ride a short down into a long, so a 51.25, 51.50, 51.25. You can try riding that down into a long, and then if the long doesn't hold, you're already in a short. But you also risk, if it was a high ticket highs, it would have a little bit more weight. Touched 51.25, didn't trade through it. So there it touches or trades through its 51.25 to get that fill. So whenever you have, two setups, you can go with whichever one trades first. And it's always helpful to draw up the opposing setup to know where there could be some resistance or some support. So if it's just, if the market just rolls over and sells off from here, well then, taking a short with the sort of anticipation that there will probably be some sort of bounce at a long is just kind of a good mental space to be in. So as soon as we break a swing low like this here, I tighten my stop to one tick above the swing high. So just 51.75. So now, basically reduced, taking out almost all the risk on the trade. And then you can just write it down. You can use 27.50s as a target for at least, if you're, I know a lot of you trade two contracts. So if you take one off at the target and then have the second one to trail, you can do a lot of damage in a good way with two contracts just by taking a couple of points out of the first one and then trailing the second. I know this is a pretty small 51.25 down to a 50s. It's only about 1.25 points, but it's still worth it. It's that process of, okay, it's easy to set a stop and have a trade go against you and have trade management for getting taken out of a losing trade. But what are you going to do when a trade goes your way without, just arbitrarily hitting the flatten button or closing out of the trade because you get scared? So then we've kind of developed this little 2-candle swing high. If we come down and break this swing low, then you can tighten your stop. I'll just move my stop down once again to one tick above this candle's high. So that would be a 51s. But breaking that swing low is what's important, or breaking that swing high is the important signal to move your stop. Every once in a while I'll get, a magic fill. There it is. Magic fill where price touches your entry and then you get filled instead of trading through. But so now essentially, taking out all the risk on the trade. Stop at 51. Taking portion off here at 27.50. So, it's not ideal to be right about 1-to-1. I prefer to be closer to 1.5-to-1 or 2-to-1 with that first contract. But because we're at the long, and even this, I'll draw up the trading hours only long that's just below us at 49s, there's a much stronger likelihood that we'll get a bigger bounce here. And there's not really a need to be overly greedy, if you will. So now all that needs to happen is if we can come up and break this little swing high, then get a little pullback. We can use that as a close out of the short, enter into a long. But in the meantime, we'll just see what the market gives us. We do have a new low tick at this long setup, and the long setup's totally valid. We're sitting at previous highs. But that's why if you just kind of go with whatever trades first, you have less kind of decision making. Oh, do I take the long? Do I take the short? Well, just trade whatever trades first and just run with that until the trade ends. In some cases, I will close out of a trade on a low tick if I'm short, close out of a trade entirely. But I always try to do my best to try and keep as many contracts on as possible for as long as possible. I do see this long is pretty strong here. It's 27.50s. So we'll see what we get. Again, my stop is at 51s on the short. The market's been a little bit challenging these last couple weeks, so it wouldn't surprise me if it did something a little quirky here. So just gonna NASDAQ just about at its trading hours only long. A little bit more conservative approach for managing your stops is to just trail either the full 61.8 or the next 61.8 in the series of moves. But again, if you've got a couple of contracts, at least you're able to take advantage of locking in some profit at the same time, reducing your risk, as well as having a contract or two on to trail. And 5 or 6 points, even if it's just one contract, that's still a sizable move. Then you add up a couple of points from the first few contracts, and all of a sudden you got a 10-point trade. Another test of that 2750. That would give us a nice little sort of double bottom and then pull back to a long setup if we can come up and break this 51s. But you're definitely feeling, you're feeling the resistance. The market flat on the day, broke through. What did we trade to 52.50s, and had the selling pressure. Not huge, but we did not get that kind of breakthrough, and then that, oh, I want to get on, I'm going to miss out if I don't get in right here, sort of chase follow through. And you don't know until you get there, and you just kind of have to watch and observe. And the more you focus in on one market and one time frame, the more you pick up on some of those nuances that can help to build your intuition as a trader. So another test at 2750s. The full, again, low to highs at a 49. I wouldn't use that as a blind limit, but just as a keeping an eye on it. I really like, setups where we have this double bottom formation, then we bounce, we break the swing high, break the opposing, and then pull back to where, we've touched our head on this 50.75 3 times, a break above it and a pull back to it, to then use that as the long entry. That resistance then becomes support. Very, very popular setup I see. But it's also important to just trade what you see, and don't make decisions about your current trade that you're in based on what one scenario that could happen. Now, you don't want to be scared out of a long setup just because you're approaching highs and you think, well, the market might retrace up here. Well, it might not. It might accelerate through. Or you don't want to get out of a short setup just because you feel like a news announcement number might be a strong report, or an earnings announcement might have some impact. You never know. So nothing to do to move the stop on this leg down. I guess you've got this one little candle here at 50.50s would be where that little one tick above that candle's high, but it's pretty tight. Either one though, 51s or 50.50s. When you're talking 2 ticks like that, I typically would just leave it alone. Again, a pretty balanced breadth. Even with this pullback, breadth and advanced decline line have not changed much. Kind of indicates that we may drift towards this uptrend line and maybe not get that breakout till a little later in the morning, but we shall see. Here's another opportunity for the market to to bounce off 50s and move higher. You can see this morning the low being right at the point of control from yesterday, opening at value area high, and now we've traded back down sort of right about 50s. That puts us right about here at the top of yesterday's range. So it's important to wait for that break of the swing high, because let's say you're getting long like above the high of this low bar here, market breaks out, pulls back, waiting for it to take out the previous swing high over here, then tightening your stop. Market moves up into a new high, leaving your stop alone here, pulls back, it gets a bounce, but it doesn't break swing highs. Sometimes you get these little two-leg pullbacks where it makes one dip, bounces, doesn't make a new high, pulls back just a little bit more, and then makes its new high. Then you can take your stop from the previous swing low and move it up under the next one. If you just move it up too aggressively, you might get taken out on the second leg down. So like kind of a two-leg pullback is pretty popular, and a lot of times it's just enough to shake out a few people, and then the bulls step back in and push it higher. So either go really aggressive by trailing each candle for a couple of days, or 5-minute trade, or be a little bit more conservative, or do both and then trail the swings. So here's our break. Let's see if we... Oh, she's running. So that 50s finally bouncing. $51s is the next long we were talking about. Let's see if we pull back to her or not. Target 53 50s. Last couple of weeks, the market hasn't been giving a lot of setups. That should change now since we've broken this 52s, even if we sell off in the next couple of days. There should be pretty good participation by both sides. But pretty tight, nicey tick, pretty tight advanced decline line and breadth. Another double top. So possible 51s, 51.25. Don't really love that double top, but you don't really get to decide. You know, entry at 51s or 50s, this is a 51, and then 52.50s is a high. I mean, that's a super, super tight range. So we'll see what the market gives us. Again, being fairly conservative today, not taking many trades, but there's not always a need to get super aggressive. Nice the Nasdaq went in by a couple more ticks, but still kind of that double top. If we do get a big double top here and come down and break the swing low, then we very well could see a bigger sell-off later this morning in the afternoon. But it's been slow for sure. The 51s, we'll see if 50s trade again. If we look at all the way from yesterday's low to high, it puts us right in the middle of the range, about 46.50. Yeah. As long as you're getting some traction, some participation, it's all right to take stabs at the market if there's at least some level of participation. If you're not getting anything, market's blowing through one way, blowing through the other way, then that's definitely a sign to push the pause button. So far, pretty tight. Another tight first hour. Back down to this 50s. Double tops like that can be pretty strong, even if the uptrend looks strong in itself. Like even without a high tick at highs. If you're trading a couple of markets like EM or ESYM and Q, One thing you can do is look for the weakest of the three to place your shorts on, and then the strongest of the three to place your longs on, sort of playing off that relative strength and relative weakness. Now, we're going to get into an interesting scenario here where we're coming down to the uptrend line. Now, we've moved a substantial bit in today's relative terms, about 4 points. So it's not very big, but in today's trade it is. And we've got this double top above us. A short would put us at 27.49.75s, sort of right at yesterday's high. So we have the potential for getting a little bit of a bounce and then breaking this downtrend line, getting into a short that really takes us lower. Fortunately, the short I took back here wasn't able to hang on for this point, but the long is also still looking pretty good. We're coming down into a low ticket lows, so there will be some buyers here at this trend line support. But on a day, coming back all to the market internals, breadth, advanced decline line, very even. And where are we at? Well, we're right back at the open for the day. So again, two trades is not, I wouldn't call that very aggressive for the ES. And on a day like today, sometimes that's all you get for half hour or an hour. So not really any kind of short setup on this sell-off here, so no need to feel like you missed something on the move down. Sometimes, when you get this little straight up, straight down V reversal, it's just a matter of very short-term traders getting the market to start down and then shake out those who were long. All right, so we've got a low tick. It's a low price. It's not the lowest price of the day, but it is at this trend line support. $49.25 would be this double top short. It has a target about 3.5 or so points away down at lows. Might take a stab at that, even though we do have this low tick. First 30, so that 49.25 puts us right at the top of the first 30-minute range as well. Like so. Just like you can use a buy stop above highs to just get into a trade on the momentum. You can also put, if you take a short at highs in anticipation of a double top, as long as you put your stop, say 2 ticks above highs, just in case it sneaks in by a tick or so, you can use that as a way to fade highs or get long near lows of the potential double bottom, and then at least if you put your order 2 ticks in front of highs and you put your stop 2 ticks above highs, now your risk is pretty small. The entries themselves are a little less critical than a lot of people place the weight on them. It's more about managing the trade, and that's where the money's made. Yes, it's important to pick low risk entry points, but you can see really clearly now the gaps below us. So a move below this trend line should take us quickly to like a 35s, 37s, coming down and filling that gap. So there's decent potential for shorts, at least shorts on the profit end. There's also decent potential, for long. So, we're starting to see more opportunities, at least. Typical to see the market go from the top of the first 30-minute range down to the bottom. Kind of like yesterday. 30-minute range moved up, went from top down to the bottom, and then back to the middle. So 48.75 gets at least an initial reaction. Pretty slow though today. Glad that we broke this 52s, and if that's all that the day results in, that's fine by me. Few news announcements coming out later this week. Keep your eye on those. And if we do end up ripping, again, back to new highs and up in this open space, should see some pretty big day after day trending, which we haven't seen in quite a while, really since the end of 2017. But VIX is definitely getting back to that territory. Once again, this third candle pausing at the point of control, getting its lift from there. So the short has a target at 45s. I'm going to draw up the opposing as usual, just to see where it's at, see if we get a stop there. If we do stop and bounce immediately at the opposing, you can get aggressive with your stop and move it just one tick above highs. It's kind of a 50-50 game if you want to play that. At this point, today's kind of a wash as it is. You got a short winner and a stop on the long. Not really getting much elsewise in terms of in setups yet, so it wasn't really a good opportunity to ride this short down. But if this short starts to get a little bit of momentum, we could be at 44s or 45s rather pretty quick. So be riding this guy out, and if we do break, we may get a bigger acceleration below this trend line, or as kind of being indicated by the breadth and advanced decline line, may just kind of pitter out here and either hover between. I've got the high and low of the first 30-minute range marked, and we may just kind of stay within this first hour's range or thereabouts, and watch for those tails as we move outside of the first 30-minute range. So still, a good methodical day to kind of go through the process, look at the markets, place some trades, take some stabs, some calculated risks. Passing on a couple of trades that could have easily been losers, and sometimes it's just a matter of getting through the day by remaining objective and focused, and then if nothing really materializes that day, then come back the next day and do it again. So as always, if you have specific questions, feel free. I enjoy the conversation. You can shoot me an email, and I hope everyone has a great rest of your morning, and we will talk to you soon.